Bangladesh recently secured a special trade advantage with the United States. Under a new arrangement, garments made using US origin cotton or synthetic fiber can enter the American market with zero import duty. This gives Bangladeshi exporters a price advantage in select textile categories. For India, which competes closely with Bangladesh in the US apparel market, the move raised immediate concerns. Would Indian exporters lose market share? Well, now that picture may be changing. Commerce Minister Piyush Goyal has indicated that India is also exploring a similar arrangement with the US. The principle being discussed is if at least 20% of the raw material used comes from the US, the finished textile product could qualify for zero duty entry into the American market. That means the tariff advantage given to Bangladesh may not remain exclusive. The proposed agreement is still under discussion, but officials expect it to be finalized in the coming weeks. Industry leaders say the move could neutralize concerns that India might lose competitiveness in the American market. The US is one of the largest markets for Indian textiles and apparel. India exported nearly $9.9 billion worth of textiles to the US in 2024, making the sector a critical export engine. Equal tariff treatment would help Indian exporters maintain pricing power and protect existing market share. Now, there were concerns that new trade arrangements could disrupt India's cotton exports, particularly shipments to Bangladesh. But industry estimates suggest those fears may be overstated. Bangladesh imports roughly 8.5 billion bales of cotton annually, sourcing supplies from India, Brazil, and African countries. It imports because its domestic cotton yarn production is insufficient to meet the requirements of its garment manufacturing industry. India itself exports around 1.2 million bales to Bangladesh each year, and that rate is expected to continue. Also, India produces about 37 million bales of cotton annually, yet still imports nearly 5 million bales annually to bridge domestic supply gaps. Industry observers say the timing is crucial. With new or upcoming free trade agreements with the UK, the EU, and potentially with the US, India's textile and apparel sector could be entering a new export growth phase. As export demand rises, production capacity across spinning, weaving, processing, and garment manufacturing is expected to expand. That could increase domestic cotton consumption and even require higher cotton imports in the future rather than reducing them. For farmers, this may translate into stable demand and improved realizations, especially if cotton productivity and acreage also expand over time. The final contours of the India-US trade arrangement are still being negotiated, and the details will matter. Follow for more stories.